We are waiting for news from these 9 major banks, Maria, for the so-called living wills, the release of these living wills. This is an age of the too big to fail. We still have the memory of the messy demise of Bear Stearns and of Lehman Brothers. So these banks were required to release a step-by-step document itemizing what they would do, an exit strategy of sorts, should the worst ever happen. And I'm sure they're doing this, albeit reluctantly, right?
Right. You know, they're coming out with basically rescue plans. Let's say we were to see the financial upset once again, if we were to see Europe decelerate and impact the United States, what will these banks do if we were to see runs on the banks in terms of raising capital? We will see living wills in terms of specifics on what assets they could sell, where they could actually raise capital. The living will is expected any minute. That's what we're waiting for. Bill, I mean, the markets closed today at 1 p.m. Eastern, and yet look at all the news that we're dealing with, particularly for the financials. You had the CEO of Barclays stepping down.
Right.
Christine Lagarde saying that the ECB is better off expanding the purchase program rather than cutting rates on Thursday when the ECB meets. You've got Meredith Whitney downgrading JP Morgan, and here we are waiting on the living wills.
And you know, this is the age of transparency. They want to achieve a sort of transparency, but I know a number of these banks are upset that they feel like they're giving away some trade secrets by showing what they would need or desire to sell if the time ever came. And it's a fine line they're having to walk by releasing these documents, and these are hundreds of pages long. I mean, these are major roadmaps that they have spent months devising to come up with a plan to dismantle, should it ever be the case. We have our Kayla Tausche, who's going over some of these documents right now as they're being released to try and figure out exactly what these bank strategies are. Yeah,
we'll get to Kayla shortly. You know, it reminds me of when Hewlett-Packard came out and said, well, we're considering selling the PC division. Yes. And then they come back months later and say, we decided not to sell it. Exactly. I mean, what happened in that 6-month period when they told the world they're considering selling the PC business? You're going to lose key talent. You're going to give, a leg up for the competition. So this is really an interesting point that they face, having to release this kind of information. Joining us right now is attorney Andrew Stoltmann. Right. He is also with us, CNBC.com's John Carney and Mary Thompson at the New York Stock Exchange. On the telephone, Menden Capital's Anton Schutz. And Anton, let me kick this off with you right here. You own a number of the big banks. What are you expecting out of this living will information that we're expecting imminently?
Type of data, and like you said, the banks really don't want to talk about this, but they certainly can spin off securities units for one. Obviously, some of the multinationals can sell off different countries or different businesses, or things like their credit card divisions. But you're right; they're giving away the secrets of what they would do if things got tough. People would know that there are going to be a bunch of these properties on the market, so they wouldn't want to pay very much for them, if anything. And the employees of those divisions would also be quite discouraged, knowing that they're going to be first in the chopping block if something goes wrong.
I think you make a really good point. Selling the securities division and the credit card operation, you're telling us that these banks would go back to plain vanilla banking, right. And of course the premiums are much higher in the other business. Let's go to Kayla Tausche right now. She's actually got the living wills info right now. Kayla, what can you tell us?
Well, Maria, they just hit the tape. We're looking at a press release from the FDIC right now noting that all 9 banks did submit their living wills in time for the deadline. But what's happened is what's being released today is just the public portion. A lot of that sensitive information about the assets that would be sold. The very sensitive information gets to remain private with the regulators. But what we have here that just hit the tape are the publicly available versions. Just opening some of them. They're thousands of pages long, so we'll have more details as we pour through the specifics of that. But we wanted to let you know that all banks made the deadline of Monday, July 2nd. Back to you.
Andrew Stoltmann, what do you make of all of this? I mean, I saw you shaking your head when Anton Schutz was commenting on some of this. What do you make of what they're having to do here?
Well, I mean, I think it's a great idea. Yes, there's a balancing act, and yes, banks are entitled to a certain level of privacy. But given what we went through 2008, the balancing act has to fall in favor of society. They almost melted down the worldwide economy, and because of that, we have to treat them like 2-year-olds. We have to treat them like 2-year-olds and know exactly what they're going to do, and if they're bad, we have to know how we're going to take them apart. I think it's a great idea.
But Mary, as Kayla pointed out, a lot of the sensitive details will be held strict confidence of the FDIC.
Exactly, as you'd have to have it, I think, in order, the banks would maintain, you'd have to have that held in strictest confidence, because you can't unveil, what you would sell, and that would put you at a disadvantage, certainly. Keep keep in mind, for the banks, these living wills have been a very expensive and time-consuming process. For the regulators, what it does for them is, in the event one of these banks needs to be wound down, and it will have to be in order basically to put to rest the idea that these banks are not too big to fail, meaning that at one point, if one of them gets in trouble, regulators will use this living will as a roadmap to wind down a bank and then basically put to rest an idea that the government will come in and support these banks no matter what. It basically is the first step, I think, to really ending too big to fail in the event these regulators have to follow through on it someday should one bank start to collapse.
Anton Schutz, what do you do from an investment standpoint here? Is this a buy-on-the-news type of story, or do you think you want to stay away from some of these banks here? Meredith Whitney downgrading J.P. Morgan just a few minutes before the close earlier today, saying next week's going to be a tough week when they report earnings. What's your take?
Well, I think you do have to own some of them. They all traded very low multiples to future earnings. We did see a very good merger Monday, this past Monday. And if the capital markets businesses pick up again, that certainly would bode well for the large ones. All the mortgage-related banks are going to have very, very good quarters. So it's not just on earnings. The capital markets guys will have weak quarters, but the mortgage-related banks will have very, very strong quarters. They're all very cheap in the future. I think the LIBOR story is actually a bigger story, and there is some risk in some of the bigger guys that may be involved in LIBOR, and that bears watching. So I think there's some caution worth noting for those that participate in the LIBOR side of things, because this Barclays thing, I think, is unfortunately the tip of a very ugly iceberg.
John Carney, this living will release all points to the regulators becoming more activist and the new world that banks live in right now that puts more restraints on them, and some say sort of makes it tougher for them to make a buck these days.
I have to say, I think the living wills are basically a joke. People said they're roadmaps for unwinding the banks. They're roadmaps that are thousands of pages long. These things are going to be so incredibly complex that nobody can ever be confident that the roadmap is accurate.
But John Carney, if a bank is failing, a number of people have said they'd rather have those thousands of pages of documents to have some kind of guideline, because as we know from the past, unwinding these without any kind of documentation that would actually provide you with at least a very basic outline is even more difficult.
Yeah,
I totally agree with you about
Mary makes the right point, because the actual living wills themselves, as you mentioned, thousands of pages long, there is some proprietary and supervisory information in the actual living wills. What they are sending out right now is the public statement, sort of a blueprint of whether or not these companies do have the wiggle room that they need if things deteriorate further. But the actual living wills will contain supervisory and proprietary information that will not be available to the public.
It's a very good thing to have the living wills in place. We do want the regulators to know what kind of steps they need to take. I don't think it will be effective to end too big to fail. I think if one of these giant institutions starts going down, they will still be able to call upon government to support it. Even Dodd-Frank anticipates that happening by saying that regulators are not supposed to bail them out, except if they need to do so for greater market security. So it's not really going to end too big to fail, but it might help on the margins, have things not be as chaotic as they were when Lehman collapsed.
That's it. Andrew Stoltmann, I mean, as you pointed out, this is not 2008 anymore, and at least they would have these blueprints that they didn't have when Bear Stearns and Lehman were going down, and our regulators and Treasury were scrambling to try and figure out what to do.
Yeah, it's just common sense. Nobody is saying this is going to end too big to fail, but it's a good first step. We can't have the sort of chaos and anarchy we had when Bear Stearns and Lehman Brothers were going down. It's hard to believe anyone except the banks could be against this idea.
All right. Thank you, folks. Your thoughts?